This is general advice, my opinions, and for entertainment purposes only. CFDs are high risk, past performance isn't reliable. I may be long or short CFDs and stocks mentioned. Content may contain language that offends some viewers. Bag holders and stop loss haters, welcome to LEVRD on YouTube. It is public. It is public. You would have seen some bloody rip snorter episodes with Benny Feingold, Mike Olkin on the uranium front. There's plenty more coming. I've got a gold expert coming on the Savi to talk everything gold while it's sitting at around this 4,900, 5,200 area. I just want to know if it's going to 4,000 or 6,000. I don't know if he's got the answer or not. So plenty more coming. This is the morning episode. We go through commodities, bit of news, what Matty's punting fund is up to. It's not a formal fund. It's my one. It's still alive. It's been a journey. I'll take you on the journey for those who haven't seen it. But she's been a ride, and I'm fucking pretty much back where I started. Right, let's rip in. LEVRD, the ASX mining show. This is going to be bloody fun. Here we go. Right, commodities overnight. Where are we sitting? Coke and coal sitting at $240 a tonne, down a little bit. Copper, not doing too bad, $6.01 a pound, so that's up a bit. Then it's probably been a bit of tailwinds last night from Nvidia earnings, and I'll go over that. Gold back at sort of $51.99, hovering around that area. Iron ore, $99. What do we got? Rare earths flying. NdPr, $111 a kilo. Nickel, bit of a kick, $8.11. Brent crude's kicking back up, 71.10. Silver kicking back up to $91. Spodumene, 6%. That's had a bit of a kick overnight, and so did the lithium equities, 23.25. So China's come out of Lunar New Year, so it's going to be interesting to see the action there. Thermal coal, Newcastle, $117 a tonne, and uranium sitting at 89 spot. And good old zinc. Zinc doesn't stink anymore, $1.52. That's what's going on. As I said, Nvidia reported quarterly earnings last night, highly anticipated. This could have fucking gone anywhere based on what Nvidia put out. If it was under, the fucking NASDAQ just would have went absolutely shit itself. But it didn't, went up, and I'll go into why I care about this so much, because this is my primary hedge, is the NASDAQ. So they went up Nvidia went up 3% after hours because they reported aftermarket. They beat the estimates on first quarter guidance. So revenue was 68 bill compared to 65.9. Earnings per share were up. Data center revenue was 2 billion higher than guidance. So they pretty much, old Jensen Wang says, our customers are racing to invest in AI compute, the factories powering the AI industrial revolution and their future growth. So it's the moat they've created for Nvidia. It means if the hyperscalers are spending shitload of capex, some of it, a good chunk of it, is going to be going to Nvidia. So if Nvidia's up, is that what's, because you've seen a lot of the tech earnings that came out, they got punished for the increased capex numbers. So tech it looks toppy, it's flattening out. Money has been coming out of it recently, and I'm effectively using the NASDAQ to hedge my long equities because it is very sensitive. So I got a bit hammered last night because the tech NASDAQ went up after market, but I'll stay strong. Right, news today. Some pretty unfortunate news, very unfortunate news for Sandfire. They've had a fatal incident at Matza. They've had a contractor that's been killed. So operations have been temporarily suspended. Thoughts with the Sandfire team. Sandfire's actually hasn't been, I think it's down 0.5% today, so it hasn't been impacted too much on the stock market front. So, yes, horrible news there. Ballard. This is before I get into the fucking half-yearly earnings. I hate them, but I suppose I have to report them, all the accounting stuff and the dividends. Dividends are good, but the accounting stuff's just boring. Half of it's all been pre-reported anyway. But Ballard. I'm not a holder of Ballard, but I am a holder of Delta. So Baldock gold resource increases to 1 million ounces, and they've got a 220,000 metre resource growth drilling program underway. So that resource is now sitting at 9 million tonne at 3.5 grams for 1 million ounces. So that Ballard is the spin out, the gold spin out from Delta. Delta own 34.4%, I think, of Ballard, and Delta retain 50 odd million cash and the lithium and rubidium. Rubidium's the hot word for Delta at the moment. Rubidium. So it's, I've approached Delta as a blow fuck all downside see-through value of Ballard. So they got the Ballard holding. They got 50 odd million cash. So if you include the Ballard holding, their cash and what their market cap is, Delta's sitting at about a neutral. I think it's gone up a bit. So it's pretty much at a zero. It was at a negative 20 million EV. So it's about a zero EV at the moment if you include the Ballard holding. And with lithium starting to get interesting again, there's a lot less downside, potentially plenty of upside for me. So that's why I'm holding bloody Delta at the moment. Half yearlies, Volt. 537 mil in the bank, no debt. Mate, they've actually issued a maiden 7 cents per share dividend, unfranked, and saying they're still positioned to deliver on FY26 production guidance of 332 to 360. They've already pumped out 168,000 ounces of that. So that's where Volt's sitting. Capricorn also issuing a maiden fully franked interim dividend of 5 cents per share, about 23 million bucks worth. So, God, you look at Capricorn, bloody 62,000 ounces at 16.27 all-in sustaining costs. Definitely the market leader in all-in sustaining costs. And obviously, because the gold price has gone up so fucking much, all their profit before tax up 128% since last year. EBITDA up 101%, so it helps when gold prices fucking nearly probably gone up 100%. That's usually how these things work. Westgold, half one results. Also, look, revenue, who would have thought? Up 98%. Underlying EBITDA is 612 million. So underlying NPAT of 314 million compared to half one last year of 57 million. So flying. So gold production of 195,000 ounces, including the ore purchase agreement. So same thing, closing treasury balance, 654 million, 100% debt free. So Boss Energy, so there, God, Boss is an interesting one. Boss is very interesting because, fuck, if they make this 2.4 million pound thing work via this soaking method using the new, what do they call them, the engineers or whatever, the gurus, geologists, hydrologists that they've got from Murano, if that works, that materially changes this Boss narrative after they've retracted their study numbers effectively. If it doesn't work, they're going to be in a bit of trouble. So who knows? This company could go either way. They've got 1.6 million pounds of uranium inventory at the moment, 208 million cash and liquid assets and zero debt, but out of the 208 million, only 52.9 million of that is cash. So they've got plenty of buffer with their uranium inventory. They're not really contracted much at all. They've got those legacy contracts, so they're pretty flexible at the moment. So, reported a net loss after tax of 7.9 million, driven by accounting impact of selling some of their purchased inventory. So that's what Boss is sitting at. I've only just started tickling uranium again. I'm tickling it. I'll show you. I'll go through the holdings in a bit. Now, fund update. Before I get into that, the NASDAQ hedge. So I'm using the NASDAQ as my primary hedge. You can just see on the chart here, this is sort of going back about a year and a half. So the NASDAQ has really, after Liberation Day, she went on a rip. It's really flattened out, topped out. Look, it could go fucking like that and make me look like a complete dickhead. But you've just seen, we've seen the volatility in the recent weeks with gold, NASDAQ, money coming out of tech. I look historically of some of the big pullbacks in the NASDAQ, and it's very similar, those they were 11, 12, 13-week periods of flattening out and then like that. So that's what the primary hedge is. So it's had a bit of a bounce overnight with the Nvidia earnings after market. So fucking God, Mrs.'s fucking dog in the background. Shut that bloody dog up. Jesus Christ, trying to fucking make some money here. So that's what's going on. So the holdings, I'm going to do a full knacker fund update starting next week. Go through every stock, what I'm thinking, why I'm holding, and effectively, here's the journey. Here's what happened. November 25th, I started with bloody 180 grand in an account, running long short. Bull market, sensational. Obviously, done me ass on a Bellevue hedge, done me ass on a Linetown hedge. They were about 30 or 40 grand each. But everything else fucking went absolutely flying. Got tricky with options, trying to hedge myself with put options. And then the gold fucking crash happened where it went back to like 4,600, down 10, 20% in a day or two. And I just absolutely done my ass. So that 180 went up to 320 and then went back to like 140 in a few days. And then I'm like, you're an idiot. Matt, you're the biggest dickhead in Australia. So that's the crux of it. So I'm pretty much back where I started, rebalancing the portfolio and just had to fucking start again with some new methodologies. So we'll see how we go. As I said, here's where we're sitting. So the US Tech 100 cash, so that is the NASDAQ. Got 50 contracts of that, so it's pretty much $50 a point. And at, I think average opening was 24,755. So it's sitting at 25,334 now. So that's down. That was like, so that's pretty volatile. That was in profit yesterday, but it's kicked back up a few percent. So that's the primary hedge. Brightstar, biggest holding. Got in there at 49 cents just after the capital raise. Plenty on the horizon there with debt and FID being announced. So holding strong there. It's only sitting at 54, so that's up a bit. Talk Metals, another one. They've done their bought deal. They're going to be drilling the piss out of that, hopefully, this year. Get a bit more news flow because that's just sort of flattened out that stock and done absolutely fuck all in this gold boom. So it's pretty much sitting at where it was before the bloody gold started ripping at the end of last year. Bellevue, I've reactivated the Bellevue short at $1.80. I will go into this more in detail in the fund update, but after announcement of the paste plant coming in, a weak start to the year. They pretty much know they've got 29 and 32,000 ounces for the first 2 quarters. To hit the midpoint of guidance, they need 2 39,000 ounce quarters. And then that's for 140,000 ounce year. And Visible Alpha still has them for FY27 of getting 170,000 ounces, I'm pretty sure. And now they've added a paste plant in that is going to service the 2 highest grade areas of the mine, which is going to slow production in the 2 highest grade areas of the mine. Good long term for ore recovery, but slowing down the 2 highest grade parts of the ore body makes me question what FY27 guidance is going to be and if there's going to be a downgrade. So I've started positioning myself for that because it has been on a run. It was hated. Went on a run from like $1.30 to $1.80, and now it seems to have flattened out a bit. So I'm using that as a bit of because I went back into Ramelius yesterday as well. So Ramelius, I like the buyback, I like the grade, plenty of potential with exploration to go beyond what their target is at Mount Magnet. So they're sort of hedging themselves out, hopefully. Gorilla, another one I've held, that's had a bit of a bounce back. Plenty going on there, probably 3 assets that they've probably got. Well, they got 4 assets, including the Canada one. But between Vivian, Mulwary and Comet Vale, they've got a lot going on. They're doing a lot of drilling. Still got about 30 odd mil in the bank, I'd say. But whether the market's just not getting appreciated because there's too many assets and they need to get a liquidity event on one of them or start mining one of them, or market thinks they're come raised because they've got to develop one of them. Who knows? But with Mr. Simon Lawson and Craig Jones on the board, I don't know what that company's up to. And if they are up to something, I want to be bloody exposed to it. Centaurus, other one. Nickel's just had the news out of like Indonesia a week or two ago about slashing production at one of their biggest mines. That thesis seems to starting to come to fruition, that could potentially be a lift in the nickel price orchestrated by the Indonesians, and Centaurus has one of the biggest, highest quality undeveloped projects in the nickel sector. Nickel is fucking hated. It's starting to get a bit more love, and I'm in it. And the uranium exposure, Cameco and Paladin, we'll go, that's, I did have next gen. I'm just going Paladin. They are producing. PLS is underway with approvals in the Athabasca Basin. Could be a fucking wild card for offtake or something. I heard comments from Justin Hooney, he'll be coming on soon too, the big fella, with bloody hyperscalers looking to secure offtake directly with companies like NextGen for future uranium. So there could be plenty of uraniums like it's in the lull, not in the lull, it's at fucking near equities are absolutely flying, but it hasn't really taken off yet, as per Mike Olkin's comments. So I've got exposure with Paladin. Cameco's they're like the Nvidia of uranium, I see, with the Westinghouse exposure, the 49% share in Westinghouse. They're building the fucking reactors that are going to need all this U308, and they're producing U308. So I think that's going to be a bit of a core holding going forward. I haven't gone too hard at the footy yet. And then the lithium exposure, as I said, Delta, got the see-through into Ballard, and any potential lithium and rubidium upside is going to be good. PMET, that is, I could have bought Liontown, could have bought PLS, but PMET, it could be bought. It's pretty high quality. It's got Ken Brisden on board. We'll see. PMET could be. Yeah, the theory is hopefully someone will buy it when the market's going off. So I'm exposed. That's my lithium exposure. So where's the fund sitting at? Fucking long exposure and short exposure. So if you take away the NASDAQ hedge, so 652K long, 82 short, which is the Bellevue short. So 400 of that long is in gold, and got 99 in uranium, 152 in, like, let's call it miscellaneous, which is nickel and lithium. So that's, unfortunately, the 180 is sitting at 166, mostly because the fucking NASDAQ went up overnight, the motherfucker. Jesus Christ, I'm a bit exposed there. But if there's a fucking market meltdown, I will profit from it. So I'm happy to just stay neutral, and if there's a fucking serious pullback, which we're seeing, and it seems like it is toppy and possible at the moment with all the geopolitical and shit going on and money coming out of tech, if it happens, I'll be safe and I'll profit. So 166. Come on the journey with me to see if I can not make that zero and make it a lot higher via Matty's little personal fund. So plenty more happening. Hit the fucking bell button on this YouTube video, on the channel. Get on Levered and get involved, because this is going to be fun, because I'm getting fucking fundies, experts, brokers, companies. We're talking small caps, big caps, medium caps. Probably not fucking huge caps, maybe. But ASX, mining, this is where it's at. Have a good day, punters.